After a rough day for Canadian oil stocks Monday, markets were a little more mixed today, with some key stocks seeing recovery. With us now to unpack some of that is CTV News' chief financial correspondent, Amanda Lang. Hi, Amanda. Happy New Year. Good to see you today. Thanks very much for making the time. Oh, sort of see you. Something's going on in the computer, so hopefully they'll be able to fix that. I think that you can hear me, so I'm gonna start just by asking. Okay, great. I'm going to start by asking the question, and hopefully in the meantime, the the control room can fix what's going on there. We heard from the Prime Minister his view on essentially what more U.S. access, if that should come to fruition in Venezuela, would mean for the Canadian oil patch. We also heard from Pierre Poilievre, who seemed to talk, be invoking there the fact that they have heavy crude and we have heavy crude. What is your view on, what are the markets telling us? What do you think about the potential impact of what is going on in Venezuela, or the potential for more oil in Venezuela getting out of the ground for the Canadian sector?
I think the markets are unlikely to have really been reacting directly to the Venezuela situation where oil prices are concerned, Bassy, because it will take a long time to stabilize those markets, to make the investments required to get that oil to market. So could there be long-term implications? Yes. Would that have affected oil prices and stocks this week? Less likely. What we have seen are a host of new forecasts for oil prices in the next year to 3 years, and the supply and demand picture. And that is what has been depressing the price of oil. And so we've seen these forecasts that keep the price of oil anywhere from $58 a barrel to the mid-60s. You just heard from the Prime Minister. Our Canadian oil producers have managed to get their break-even costs down. They'll still make money at those levels, but it is not a scenario where excess demand is driving this. It's excess supply. So it's an interesting aspect of this, actually, because we saw this renewed debate of let's get our oil to market, let's get that additional pipeline built. That would actually send the price of oil even lower. Having said that, we want to, of course, take the market share where we can. The scenario, though, as we look out in the years ahead, is that the world has more oil than it needs, and that's likely to continue for a long time.
Do you think that's the case? I mean, I take your point on that. I certainly have heard, I guess, from previous pipeline proponents, like the individual, for example, who used to run Kinder Morgan, that essentially, like you said, the markets will determine whether that capacity exists. And right now, for the next 5 years, maybe 10 years, we have what is necessary, what the markets are demanding. But there could be additional demand beyond that. I know the Energy Agency now forecasts more growth in the demand for oil than it did, let's say, a few years ago. How do you think that might factor into it? Particularly because, as you mentioned, like, the political nexus is around the prospect of this new pipeline, should one ever actually be proposed.
I mean, the longer term prospect for fossil fuels is as much your guess as mine, and your next panel has a better shot at answering that than I do. It's a political question. There is enough oil in the world to continue to fuel us for many, many generations. If we want to do that, we may find that as new technologies come online and are perfected and are cheapened, that we shift away from fossil fuels. I've seen some of the same kind of forecasts you've seen, which is that the timeline for that has been extended. That would really play into the argument of Canada has this resource. There's a market for it today. Get it to market today and get as much of it to market today. We're making buggy whips here. At some point, we'll likely move away from that. Now, will that be 100 years? Be 10 years? Again, your guess is as good as mine. So get the markets functioning while they can. But every time we do that, of course, we put more oil on the global market. So in the current environment, that means we will depress the supply. We will make less per barrel as we ship new barrels. That's just the nature of a supply and demand market. So unless something massively changes on the demand side, we're likely looking at a oil price that'll stay a little range bound. I mean, again, some Canadian producers can produce at $18 a barrel. They're fine with a $60 barrel of oil. I can tell you the government of Alberta doesn't love $60 a barrel. It would like to see $70 a barrel. Canadian consumers have a sweet spot. We want oil to be low enough to keep our costs down, but high enough that our economy does well, that our exports are solid, and that government revenues are strong. And the estimates put that number somewhere in the high 60s. So the estimates I've seen from the IEA and from Deloitte this week are lower than that. That's bad for the Canadian economy. So that's where I'm kind of focused, less on Venezuela, more on the fact that currently the supply-demand picture doesn't favor us, even though we'll still see oil producers making money.
You mentioned the politics. There's even more politics associated with the way in which all this unfolded and the prospect of, for example, Greenland or a whole bunch of other things. I just wonder, is there any early impact economically? Anything further destabilizing, or have things kind of built in the unpredictability of the U.S. leadership?
I think that you really nailed it there. These are the kinds of events that in another time and place, when you and I have both been alive and reporting on these things, would have had a shocking impact on markets, on U.S. treasuries, on all kinds of destabilizing aspects. I think the markets have taken it in stride because we have become accustomed to the unknown. And I would even say, you could literally see a takeover of Greenland and say the U.S. economy will keep ticking on and people will carry on. And that's a shocking thing to say out loud. But I think we have become used to the uncertainty now. Businesses aren't used to it. I will say this. The one thing that, and this is true of the oil price, it's true of understanding what the path is in a place like Venezuela. Businesses like to know what's happening beyond the next 3 months. It makes them very hard for them to make investment decisions. We have seen business investment down in this country for sure. So the uncertainty around trade is playing out in that way. And that's a pain point because an investment that isn't made today costs us for not just months, but years. And so that uncertainty is where it places. So it's not an immediate reaction in the market. It's a longer term loss of confidence, loss of investment that we pay for a while.
Okay, I'll leave it there. Amanda, pleasure as always. Appreciate your insights. Thank you.